Hey everybody, this is DayTraderRockStar, and I'm here today to make a pretty decent announcement, a very significant announcement for DayTradingRadio here, and it's all good. It's all good. We're trading here in August. The market's been pretty dead. The summer's been busy with some other things I've been taking care of, but I'd say we'd focus mostly on stocks, and I've been getting a lot of people reaching out and saying, when are you going to start trading the futures more? And I've always enjoyed trading the futures. But sometimes we get into a groove on stocks, because sometimes we get a groove on options, sometimes we get a groove on the futures and stuff. And it just seems like we're concentrating on some stocks. So we're going to concentrate on the futures more going forward from September on. Not, we're going to definitely be doing the stocks too and the balance and everything, but today I want to talk about a new project I'm starting, and it is for those ES traders, especially the beginner traders, and myself included, because we have such a good methodology that you want to put it under a test. Because of what I do on the radio, it's very hard to cover the show, cover stocks, take questions, do a lot of things that I have to do on the show, and then also see every opportunity and act on it. It takes a certain mindset to get into the market. It takes a certain mindset to get into a trade. If you're not there mentally, then you probably end up passing. That's a confidence issue in the markets, and it's sometimes an excuse, because if you do have a good system and a good method, and you recognize that method, you have to let that method work for you. All right. So today we're going to outline what I'm calling a blueprint. I'm naming it the Blueprint 5000, and it's the HPS method using the divergence to trade the ES, basically. And how I'm breaking this down, it's going to be a whole section of the site. Basically, everyone's going to has the opportunity to do it themselves, and it has an interesting concept behind it. Because this is great, because what I want to do for myself is lock myself into recognizing every setup. Now with the increased, or the new advances, the new additions to the show, we have these great alerts now, both from the Rambot and we have the Tradeometer. But even we got now these text alerts that we have been hooked up with, the text alerts, the emails, instantaneous. So if we do have say a Rambot signal, you could actually get that instantaneous text that's happening. So it's going to even be better, so you're not missing opportunities in the market. Because of the new features and stuff, I think it would also be a good time to start this project. And the project, again, I'll describe that in a second here. Again, the project is really based on trading the ES and to build confidence in the methodology. Something that's so strict, with trading. It's so hard, because if you either, there's not much of a gray area when it comes to automated trading and, manual trading. And when you have the human emotion involved, that just, it's so hard to compensate for that versus an automatic trading style, where you have an established stop, you have an entry criteria, an exit criteria, et cetera, and no emotion involved. Big difference between the two. I prefer to have a little manual say on it. Just there's intuition, there's experience over time to see that. But again, that also kind of contaminates. I call it contaminates a method once you start adding your own opinion to it. Especially an opinion can do a lot of damage in a trade. So this project is to kind of eliminate those opinions. Take the setups. I have I have all the criterias pointed out. You have, the whole methodology pointed out, and actually put it to the test. All right, put it to the test. And, I think this would be good, because the way I have this set up here, this is great for people who are just beginning to learn how to, maybe trade futures. It gives you an opportunity to see the methodology work, and then start trading it live. That's, I think, another important part that a lot of people don't understand, is going into something and learning as you're going with live money is very difficult. It's it changes the game frame. But if you've have a successful track record or have done something using that same methodology, you know you're going to continue to do it, but your first time around was you were just using part of the tech. You're using actually the demo version of it just to trade exactly the same way you would do with the money version of it. Once you get to that money version, you should be able to have that discipline. It's almost going to like boot camp, because you're going to have to get through. The hardest part of being this trader is to be able to just take the signal and take it off. If you do that and you're able to get by that time frame, doing that on your demo without falling victim to the market's tricks and the lures of out there, or just feeling your emotion. Once you start to develop that, it is kind of a boot camp that you're trying to get through that whole process. Just let the thing work for you. Start to see it, build the confidence, build the discipline, build the patience. It becomes routine, but you need to go through that time frame. You need to go through that boot camp to really understand what it's about, because just saying you're going to do it, believe me, it's so many opportunities you might miss because you're just thinking, and then the next thing you don't want to chase it. Like you might see a signal, but you don't take it, then you feel like you're chasing it, and that alone is going to cloud the results of the method, because the method is going to work over time. If you're just picking and choosing it, you're not going to get an accurate accurate results. And that's something you can't do with. This is a business. This is something very very serious. So you can't just be half-hearted about it. So again, put it on paper. Put it in it's going to be the forum section. We're going to be doing some real good tracking. I'm going to be also reaching out to Apex brokers a little bit more, because I want to try to get a downloaded version of the platform for everyone, but on a smaller amount, because I know when you download the platform, you get that $100,000 buying power, and I don't want that. I don't want people to have that. So I'll show you what we're going to do here. So let's start off here and let's talk about the Blueprint 5000 project. And again, this is just the first announcement of it. It's a project that I'm going to enjoy doing with the members. I also wanted to think about getting a team of futures traders together to kind of have that round table every week and talk about it. So there's going to be a lot to grow off of this. This is again starting in September and the late fall months now. Markets should be getting a little bit more active. We have the election coming up. There's going to be a lot of opportunities in the futures. It'll be a good time for us to start to apply this program. So take a look at it, see how you like it, and let me bring it over right now. Okay, Apex Blueprint 5K. Now I started with the 5K amount because it's going to be a beginner's kind of account for people who are not trading with too much money but want to understand the concepts. Preferably, of course, if you always start off a little bit, with the more money you start off, you have more chance of losing, but you also have a better chance of staying in the game. There's less pressure. There's a lot of things that go hand in hand with having more capital in the market. You don't even have to have it in the market. Just having it and understanding how much pressure it puts on you when you don't have it. So, but in this case, we're going to start off with 5K, 5,000. I think that would be a good amount to start the project with. Now, you could start with 2,500. You could start with 10,000, 7,000, whatever you want to start. I wouldn't go under 2,500, and I prefer the 5,000. So we're going to call it the Apex Futures 5,000 Blueprint. I put down the Apex. I haven't really even talked to them about this because they are our preferred broker for futures, and they've so they actually have some really good stuff and a great platform that you could download. So we'll talk about that. And the blueprint this is the blueprint. The blueprint is this is a definite set of rules, all right? And again, if you don't follow them, then the method will be contaminated and you're not going to see true results. So this is something that is important for me to have it all outlined for everyone. That way you could it's almost like a flow chart. Is the setup there? Yes or no? Take the trade? Yes or no? Place your automatic entry criteria, profit exit criteria, automatic stop criteria. Very important, because once you have those three things, your trade is underway and you don't have to worry about it anymore. So this is very important. The risk management for the method, how to develop that and why is it so. We'll go over that. Position sizing. This is very important, and there's a big segment on that. How to set up your charts, of course, and we're always talking about that. Tools of the trade. About the new tools that we have, and starting balance. Again, here we have the starting balance. So you can see here, this is the important little puzzle over here, and remember this puzzle piece. Setup conditions, entry rules, initial stop rules, exit strategy rules. These are all pieces of the puzzle. You have to apply these every time you get into a trade. If you don't apply it and you're just hoping for the best, then you're not going to get results that are going to help you in your confidence. They're not going to help you in your strategy moving forward to adjust things and stuff. You have to be true to this. This is so important. And I know how hard it is. That's why, I've been working on it, trying to really establish those set of rules, something that's proven over and over again how these things work. And even this past week, we took one trade, but it was an HPS trade set up. And, and that just kind of, I wanted to follow up on that. And just being able to, and we're going to talk more about this setup in a second, but understand why this is a good area. Take that trade. The divergence setup is right there. It doesn't show up anywhere else. So when it does show up, we pay attention to it, and you can see the results. And these areas also are indicators. We have the Rambot, and we have the tradeometer, one on top of each other. We have the Rambot sell signal there. You're not going to miss these. At least you're going to have an opportunity to see these happening, and then you can make that decision. But the decision basically has to be made. You can't just... like I said, I'm going to stress this. I'm going to stress how important this is, and you might blow me off and say, oh, yeah, whatever. But believe me, the most important thing is to stick to your game plan, even if because that's confidence. Confidence in trading is so important, to be able to step up, take your trade, and do it each time, because it's okay. It's okay. Some of them will not work out. It's not a situation where you're looking at 100% success rate, not at all. You have to be positive, and this method is going to make sure you be positive. Percentages, after the all the data is in, you'll see your percentages. All right, so I want to get back to the Apex thing. So I was checking out the Apex site. Now we have a platform that I use during the day sometimes and show the Apex platform. It's a nice DOM. I'm going to show more of it on some videos. I think we're going to, again, there'll be other videos based off of this whole project, and this is just the introductory video. But you could go to the link right here. That's the link we have on our dashboard. Or you could just go to their site, Apex Future, and right here it's the free trading simulator. But also they have an auto-traded systems, which is good, because I actually have to talk to them about that. I didn't realize that, so we could actually apply this methodology onto the platform there, and which I would like to do that. So I want to be looking at doing what we're doing here, and applying it to the Apex Futures auto-traded systems. So I have to actually look. I just noticed that today, and I thought, wow, that's great. Free trading simulator, you just fill it out. They give you a link. It's good. You start off like that. Now, again, I'm going to talk to them, and hopefully, Paul, you could talk to them too. Is if we could get a special downloaded simulator that starts off at $5K. It doesn't give you that $100,000 trading capital. I want something more realistic where people could see it and they're stuck to it. That way, when you look at their position sizing calculators, you're not just saying, oh, you know what, let me just take 3 contracts because I can make a lot of money here. It looks great. I want to take 6 contracts. And you start goofing off, or you're having too much to drink, and you just start messing up. You want to be the most realistic as you can. So, on the dashboard, so right here on the lower right-hand corner of the dashboard is where you just click on that, and a download will just start, and you have it set up in seconds. Once you download that platform, you'll learn about it a little bit more. They have a good learner section. It's basically cut and dry. You have a DOM, depth of market. You could open that up by just going up to File and Open Up New, and then here's your DOM. And again, you'll be learning more about that too. Also, so just the first part is just getting a feel for what it looks like. Also, it's actually a great thing. I don't use the charts on this, but I have my own charting system. But you could just click on whatever index you're looking at, or in this case, futures, the ES here, and you can bring up a chart, and that chart should pop right up here. Boom, and you could put your email. You could put all the indicators. It's a great looking chart. It's real time, so you can actually trade off of it. It's active trading chart. You could actually go into trade mode. So really nice, real nice platform. There's a lot of options, lots of bells and whistles, and there's your DOM and stuff. So get used to that. That's one way we could actually use the platform and build the methodology out. If you have your own platform, I have also Bracket Trader, which works well with IB. You can apply some of the rules to it. But again, the important rule is to start off with a set amount of money to really focus on being disciplined, not to jump into anything that's not a true signal, and let all the signals, unless, again, we're going to have somebody, this is, again, the hard part, because as an experienced, seasoned trader, you might run across, you might know, hey, it's probably not a good idea to take a trade into the 2 o'clock Fed meeting, Fed announcement. Even though they probably will give you a great setup. I mean, that's something we have to, kind of figure out how we want to use that to our advantage, or to step outside that, because lots of times you might get a flush into a news event, gives you a clean divergence, and that divergence, because you could see it as an opportunity to go short or long, depending on where it's at, and that's a great opportunity usually. But we have to decide sometimes also. Sometimes the market could give you a signal, and then because it's so choppy, it's going to really just chop you out, because you have an established stop on either direction, and the market, because of the added volume, is going to be much harder to time. All right, let's continue on now. Now, we know that the method is our divergence method. It's a excellent method to go. It's real tight, works great. Want to put it through the test using this project, and so I'm going to post most of the stuff in the Day Trading Radio forums, and it'll be under, of course, it'll be under the Apex Blueprint 5000 topic, and you'll see a lot of these slides there and stuff. And a lot of the stuff I'm going to be talking about now, I'm just touching the tips of some of the topics here. I'm going to give you examples and just kind of give you a well-rounded idea of what we're looking at as our method, and how incredibly tight this criteria needs to be for this to work. All right, so let's just go to the first thing we were going to talk about. Remember, I could go back up here and look at what we have to deal with. We have our order entry criteria. We're going to go over that. The profit area exit criteria. We're going to go over that. Automatic stop criteria. We're going to go over that. The risk management for the method. We're going to go over that. We're going to how to increase your position size, and what should your position size be. So I want to start off with that, because as you're starting off on a very small account, you don't want to blow out your account right off the bat. So you might be able to buy 3 or 4 cars or contracts, but for everything to work out right, you're going to stick to a very orderly, disciplined way of building your profits, and then applying that and increasing your position size, and continue to build the profits and applying that and increasing. So it's a step-by-step process. And so here it is. So basically what we're going to do is we're going to risk just 2% of the account size on any trade. So that's basically just, we're going to call it the 2% rule. Now, a lot of people in the industry use 1% when they trade futures, or somewhere around there, 1 to 3%. I think 2% is decent. I think that the strategy and the methodology is really strong. That you could even go up to close to 3%, 2.5. I would even go. And these are some examples of what it's going to look like. And I'm going to have a downloaded link for the position size calculator for you on the forum too. But this, I just took some pictures of it so you could see what we're talking about. So this is with an account size of $5,000. There's a typical margin requirements on some of the brokers. You can adjust that. It's not really going to do much because we're looking at account value. Position size, PS, how many points you're going to risk. Now, I put 1.5, and this is important, because we haven't talked about this, and how do we determine what our risk parameters are. How do we know it's 1.5 points? Well, we're gonna just talk about that for a second. So we're gonna jump back here, and we have to go back to the methodology. So let's actually jump back down to the methodology here. Let's start off with that. Divergence rules. All right, that's what we're going to be talking about. And we're going to jump all over. I'm going to show you a lot of different things. So this is a divergence rule. Now, of course, if you're listening to this for the first time ever, you probably have no idea what I'm talking about. If you've listened to the show or have listened to some of my videos and talked about it, you know that this is one of my main signals of taking a trade. And this, carries across stocks, it carries across options, it carries across everything. It's just a fantastic way of trading. So this is based off the ES here, and this is the rules that we're going to be. And again, rules. These are rules. This is important stuff. Stage one, and I break down a divergence. All right, so I'm going to show you, how a divergence is working out. Stage one, the divergence should have stochastics under 20 line. Now this is on the buy side. And what I mean by that, let's go back over here. And again, this will be on any time frame. So the time frames are just relative, but the in the case of that 1 minute time frame, this happened to be a 5 minute setup also. The first time you make that low here, and it's not the best example. Let me go out a little bit further. Let me go out to another divergence where we have a good signal back here. I just was given an example. Go way out, way. So here we are. All right. This happened at 9:30. There's an early move down. The candle here kind of spiked down. I'm going to zoom in a little. Reverse back up. With that spike down, well, the first point, the first thing we're talking about is stage one of divergence. Stochastic on the first stage of stochastics is always that higher low. Makes an oversold level. Gets under that 20 line. The bounce should bring us back above the 20 line, this dotted line on the bottom. This line right here. That bounce should bring us back above that line. Then the price is going to move down quickly. Take out the lows, but we never take out the 20 line. We hold above it. We cross back up above the 20 line there. So that is our true divergence. So it's all about that 20 line. We have to be under it. We have to be back above it. We have to have the price break down, but we have to stay above it. Now that's a little bit different from, that's what we call a visual divergence. It's a visual good divergence. And what's important about that is, you don't get confused with the line. Sometimes you'll see these divergences happen under that 20 line, and it might be in a process of just being embedded. I think it increases your risk a little. And again, we want to really not worry about anything other than the perfect setup, because we want to have something that we could go back and look at the results. So at the same time, stochastics hold above the 20 line, and in turn I'll put in a higher low in the stochastics. So that is what the look and feel is of a divergence. Now that's on the buy side. optional but recommended. And again, this is another thing. There's, seeing a divergence like that works out great. Breakdown, the cross, that's all about the price and stochastics. But there's a couple other things that add to the power of divergence. The bigger time frame. If we see a divergence on that 1 minute time frame and we have our 5 minute or 60 minute also pushing higher, preferably off the oversold level and starting to turn back up, there's a better chance of a much bigger rally developing. All right, so in that case, you could actually, that's what happened in this case. You have a much bigger rally. The lower low should be capped with a reversal candle. We're going to talk about that. I want to also, I really do. I really want to keep that as an important criteria. I think you got to have a reversal candle, and I'm going to talk about that. So each one of these criteria need to be met before taking that trade. Sometimes you might get a lower low and a higher low and no reversal candle. We're going to go over the reversal candles. It's going to be a little bit tighter, but when you do have a good setup, then you'll have that confidence to get in. And then divergence signals are best when they're lined up with other indicators. In this case, a lower trend line or a recognizable pattern, very important too. And we'll keep that in mind too. It just adds to it. So that is our divergence rules on the buy side. The opposite is going to be just on the sell side here. I'll bring that up. Just same thing. So you have buy, sell, just the opposite. So here's your rules. So when we go back now and we start to talk about our what is our initial stop going to be? Is it going to be 1.5 points, 6 ticks? How do we apply that? How do we come to that? And that's nothing. That's going to be an average for us. It really is a candlestick stop criteria, meaning if you have that reversal candle and it triggers a divergence, your stop should be right 1 tick underneath that divergence candle. And when we have that setting up, we don't know if it might be. Hopefully, it's under a point. Hopefully, it's a very tight stop. But most likely, maybe you're going to get a point and a half stop. If you get into a good position, have that reversal behind you. The distance between from where you got in a reversal candle, hopefully, is about 1.5. But it doesn't matter if it's 2 or whatever. You have to stick to the strategy, and you have to, have to look at the candle as your stop level. So 1 tick underneath that reversal candle. So, and again, we're going to have that all broken down for you. So in the case of that, if you're just looking at 1.5, and I don't want to go too much more than 1.5. If I feel like, well, this candle and I'm getting a bad fill and it's over 2 point risk, I might not take it. I want to still have a good risk reward in my favor. And again, to understand the account size here, one position here with a 1.5 stop is about 1.5% of the account size of 5,000. So it's underneath that 2.5. So you could actually have one contract. Now that's how we're going to use this. We're not going to be able to go up to 2 contracts because you see that's 3% of your portfolio with a 1.5 stop. If it just happened to be a 1 point stop, you probably could use 2, but you're going to have to adjust that on the fly. So if you have a good setup and your candle is only one point lower, or your stop relative to where that candle is just 1 point, then you actually do have a 2% trade opportunity there, which enables you to take two cards and 2 contracts. And we're going to continue on, and you could adjust, and you're going to have this. But like say you have 7,500. Just breaking down what a 1.5 is, but you're going to adjust that. Maybe it's a 1 point, maybe it's a 3 point, and you're going out to 3 points. If you had 3 points at 75, you could just get one position, one size, 1 car. That's your risk, 2%. If it was like 1%, if it was just 1 point risk, and you had a 7,500, you could see that the percentage here, you could go to 2%, which is three contracts. Would only be risking that. Only 2% with 3 contracts. So it's a sliding scale. It works well. It's you want to again be very understanding of what your risk is and how you want to be. You don't want to be all over the place. It just doesn't add up in the long run. And again, you could go out all the way to 2,500. And if you're at 2,500 here, you're not dealing with much. You're already at you need a really 1 point stop just with one car. And that's a tough thing to come by, So even if you start a little bit lighter, 2,500, maybe go up to 3 which is going to be your max. But I think you still have to deal with stuff. And of course, this is a good feel for the 5,000, and you could save that. But again, I'll give you this download in the forums. So now that you understand that how you determine position size, we understand what the divergences are: buy side divergence, the bullish divergence, the bearish divergence. Understanding why, and again, these are just things that I teach throughout the day. Understand why. Momentum and stochastics are a great measure of when the trend is about to change, and we get those nice pivots, and we can actually get it. There's a great example, and this is a great analogy that George Lane uses about a rocket, and that rocket here, that the power, the engine. Even if you were a Boy Scout and you had model rockets, that little D engine or C engine you put in there would blast off, but the engine would die halfway up. The momentum here would carry the rocket further. But what we're measuring is dying off is that engine, and that engine is is our divergence. So we see that stochastic here start to roll over, but the price here continue to push a little bit higher. But we know now that the engine has died and the momentum has shifted, that the rocket is soon to come down also. So we understand that. That's why we're so into waiting for the best setups. We went over the rules here already, so I'm not going to go over those again. Let me go back down here. Again, like I said, this is all going to be out there. So when we talk about that stop loss, that stop loss is going to be, identify that divergence. Here, that reversal candle, qualified divergence. You get your entry in. Your stop goes right underneath or one tick underneath the low of that candle, that divergence candle. The lower part of the divergence. You have to have a lower low and a higher low. The opposite is going to be for this sell side, and that's just a standard divergence there, or a stop on that divergence. So whenever you have that candle, that lower low, and you start to feel the divergence here, you go long, hopefully you get off to the races. And any of that, any of the situations here, whenever you have a divergence low or divergence, trigger, once the pattern fails, it fails. So, that's just a good area to put a stop in there. Not much on this little slide here. What is the best time frame to trade, and what does finding divergence on multiple time frames mean? And because I have all the examples for you, and again, a lot of this is just repeat knowledge that we talk about every day. But if it's for the first time, this is something important, because we have to determine what time frame you want to trade on. Having a methodology is important, but we have to have that going straight down to the last, to the last second, to the minute, to the 5 minute, to the 60 minute. This all increases your probabilities of success. So once we're able to identify that 1 minute time frame, that your 1 minute time frame could rotate up here and pull back, and you might not want to be part of that. So you're in and out. Our exit criteria would tell us to get out here, even though the bigger time frame on the 5 minute is saying, hey, we're going to have a bigger and better trade. You have options here. You have an option to get out of here for a fast scalp, or you have an option to look at your bigger time frame and say, well, this is probably going to go even higher. that all works together. Your 5-minute time frame, and it's right here. Usually a great setup here. Criteria is there. You have that lower low, and then you actually take out the low, but you hold above that 20 line. Big reversal candle, almost an engulfing pattern, and from that point on, the 5-minute here pushes higher. So if this 5-minute and a 1-minute here all lined up together, and I think this is what it was. This was a 5-minute, 1-minute. This really had a nice pop, and we had a small little sell signal right there, and it made sense. It was a small little sell signal. We pull back, and then we pop further on the bigger time frame. But this is really just a key thing to pay attention to. And we mentioned it in the room actually on Friday. It says the best of the best is the combinations. Lots of times you'll get that dual time frame. We've got a 3-5, which is key. 3-minute, 5-minute, a 1-minute, 5-minute. I think is just as good. So. We have those multiple time frames, and that could be criteria also. I mean, you could put yourself into that small little box and say, I only want to take setups that give me a 5-minute, 3-minute combination buy or sell signal. That makes sense. That's fine. But stick to it. Don't make up the rules as you go along. So we're going to be sticking to stuff. We're going to stick to this. There's going to be, this might be a project that continues to go on. For newer people that want to just jump on board. 60-minute time frame, we don't pay attention to it as much, but if you have that divergence on the 60, you can't deny it. It's just the best. Here's a sell divergence back here. And, if we do look at shorts more often, they're on the 60-minute time frame. And, nice pullback on that 60. And the same rules apply. Rotations are important to pay attention to. Once you get up, down into an overbought or oversold level after a trade, you should be out of that trade. This should be a mechanical process. 60-minute buy signal, same thing, Here you had that nice divergence, a nice breakout of the channel. Probably, at this point, this one's much higher. Daily divergences. Usually big areas in the market. You have a slight divergence here, which really started this last big move. I don't even know when that is from. That's early in the year, April, May, June. But again, it's good to have that on your side, but probably not important with this method. It's good for the daily. It's good for your daily swing traders, but it works. The important thing is understanding that these things work. These really work well. The importance of that reversal candle is also going to come into play during this. That's another big question we want to, really answer. Do we want to have that reversal candle as our trigger, or do we just want to have the divergence? Again, once you have a reversal candle and you stick to reversal candles only, then you have a different outcome versus taking reversal candles and maybe not taking and taking other ones. So, like I said, going into this, you have to make that decision. What the criteria is going to be I would prefer to use a reversal candle. Now it's going to leave out a lot of setups. It is. You might not get as many. You might cut them in half. At least in half. If we just wait for divergences. I mean the reversal candles. And again, buy side and sell side. I'm just going back to these right here. I mean, this was this was a 1 minute. I would probably consider that a pretty decent divergence right there. There was a decent candle back here, and when we see a divergence, or we at least see a setup possibly happening, we had this as a tradeometer alert up here. There wasn't really a divergence there. Trying to find another good one for us. That was not a bad candle, big candle on that. What I said. Something we have to think. But let's go over the candles anyway. We want to go over the candles anyway. I'm looking at this chart and I'm not even showing you anything. I apologize. Here's our reversal candles. I want to call it the sixth indicator on the HPS methodology. Hammers, very easy to see. They give us long shadow. When you have that shadow, you put the stop right underneath it. Shooting stars, the opposite, same thing. You have your shadow up on top, close it on the lows. Typically, when we get that shadow in reversal, you usually have that higher high, and the stochastics underneath would put in a lower high. So that's how you see that candle really work well with those. And this is one of the bigger candles that we look for. Here we have bullish engulfing patterns. Engulfing patterns in this case, we're engulfing the previous day's body, the body of the previous day. Now these are old school, Japanese candlestick techniques and stuff, and they have a reason behind why they work sometimes, but it's not like back in the day when a lot of people would follow them. It would be a self-fulfilling prophecy. These still work out well. You get to measure out where sellers came in and where the candle ended, and if buyers took over on a shorter time frame, and anything that gives you an edge is an edge, So here, we look at that type of pattern. We'd like on all these reversals for the bullish engulfing to actually take out the lows and then close back up towards the highs. And here's the bearish. The opposite is the bearish. The same thing. Take out the highs, gap up, close on the lows, and that gap up won't get followed. You won't get any follow through on the stochastics. You'll recognize that divergence, but you'll have that candle. You put the stop one tick above that, the buy stop for the short. Piercing patterns, pretty much the same. Bearish piercing pattern, and a bullish piercing pattern. This is the dark cloud. This is the bearish. All right, so here is the bullish. You're moving down. What happens? You gap down again in reverse, and you pierce back into the previous candle more than 50%. You push back into the previous candle. Same thing here. You have a nice move up. All of a sudden, you gap up, and you end up closing underneath the 50% point of the previous candle. These are piercing patterns. The bullish piercing, again, just picture this is coming. This is your candle right here. You're selling off, and the next day you gap down and close back above it. And the same thing, dark cloud cover, the opposite. So that is important too, to have that candle, and understand where to put that stop in relationship to the candle. But that's already defined for you, so no problems on that. I think the added, and a great thing that's going to be added here is the technical tools that we have. We have the Rambot, which is going to identify the divergences if you're not watching them. You have the opportunity now. You have the tradeometer, which is a separate product altogether, but you're seeing the results from this daily. I keep everyone informed on how good this is. These are wild cards. The Rambot is going to give you an idea of where the divergences are, so you're not going to miss them. It's important that you come in, or I evaluate them, like right here. There might have been one. Let me bring this over here. We might get an alert. I'll say, all right, we have an alert. Let's take a look at this. And I'll say, all right, we have an alert here. Well, I could see that we have the higher low. We have this low here. Took out the low. We popped a little bit, brought us back up, and then we came back down. Took out the low with a reversal candle and turned back up. This all has the qualities of a divergence on the 1 minute time frame. Now, it's recognizing that, seeing that turn back up, what's the best entry you're going to get? Maybe you get here, and you're not, we have to take that in consideration all the time. So, what's your worst case scenario? We'll call it 69.5. How far did this one go up? 71. 71 right here. It's not a lot. but it's more than enough for the criteria to play out and give you that profit. All right. So that's another important reason. You might have a divergence, but it doesn't mean you're going to follow through on it. It's going to be the best trade of the day. That's a 1 minute divergence. And you have it, but you also have that rotation. And once that rotation happens, you have to make a decision. You might not get out of that with more than a quarter or something. You have to make that decision. So the exit criteria is going to be important. It doesn't mean that we have to get the trade or we get stopped out. I think if you have, and I think this is important too, if you have a profit and you have your rotation, you could take that profit off, even if it's not the profit that you're looking for. Say you were looking for 3 ticks. The methodology said, all right, put your order in for 3 ticks, or excuse me. When determining what our profit potential is, it will become an issue again, because a lot of people will be concerned about leaving or taking it off the table too fast. Everything is kind of fluid when we talk about taking a trade, and we have to establish what the time frame we're going to be trading in, the overall direction of the market, the overhanging larger time frames, and how they're pushing on the market. So all those have to come into analysis as we take that trade. So we actually do see that divergence here, but also understand that we've broken down out of a downtrend. We're seeing to be, kind of maybe putting in a little bearish move right now. The slow stochastics have been embedded to the downside. We're not making any big rotations, though we did have a little divergence here. And I've said, all right, well, we have a divergence in kind of a piercing pattern, decent enough candle. You could take that trade, place that stop underneath that level right here, and let the trade work out. Now, what if you did get in here and it pulled back? Well, you're still in this trade, no problem. The problem is you're going to come to a decision here, because part of the criteria is as you get into an overbought level or approach that overbought level, there's a shot that overhanging trend is going to continue. And we did kind of pull back and then chopped around and eventually pulled back again before we got a big signal and we had a bigger move. So we have that 1 minute signals, we have our 5 minute signals. These are all have to come into play, and we have to understand each setup has to have a little manual adjustment to it based off the time frame and stuff. And again, that makes it very much, it makes it pretty hard to continue to keep that type of discipline. To understand everything, all the moving parts. Well, that's, if it was easy, as they say, everyone would be making money. But this is an exact method. So we're going to concentrate on keeping it inside the controlling factors. So we're talking about the tools, and now the additional tools that are going to help us manage these trades. Of course, the Rambot and the tradeometer and the combination of the two. But down here, I added what it looks like as your management. If you go on your dashboard, upper right-hand corner, you'll see alert management. And if you click on that, you'll get this nice little page. It won't look like this, but you'll get a page where you could select your text message alerts and your email alerts, and you'll see that the Rambot is there. Now, my goal eventually is to have, maybe some of the combination things. I like to have... we're going to get the maybe another time frame up there on the alerts. The the Rambot is really good. It's so good. I'm just so happy that we have it as a text message now, that you can actually get a text message on your phone. I think that just it's not much more to be said. That it's going to give us an opportunity to be there. Make sure nothing's really just sneaking by us, and each opportunity is an opportunity. See what else we have down here. This is actually this was the tradeometer this week. The tradeometer has been off the hook lately. And again, if you have the tradeometer package, having that on your side is also an important indicator. This is... This is on the NASDAQ, the ES, we have the YM, but just 2 different days on the ES, and even the smaller little moves. Important thing is if you have it and you say, all right, well, we just got an alert, it is a visual indicator, a visual divergence, everything looks good, reversal, boom, we also get a tradeometer set up. That's like, that's an added plus. So it's a great thing to have. So, and I guess it comes down to now, there's other pieces of the puzzle we're going to fill in, and that's going to be done on the forum and stuff. But I wanted to announce this, and I'm going to go back to our original announcement page here. We've kind of talked about the order entry, the profit exit. The profit exit criteria is going to be a little bit more of a, I want to just touch base on that for a second. When we talk about our DOM, or we have a, maybe your bracket. Here's your DOM on your Apex Futures platform, and when you put in your automatic, I kind of put in a bracket order automatically that kind of triggers, what I'm looking for. So again, I'll put that 1.5, or the stop here, I should say, 1.5, and then my profit here, believe it or not, I'd like to, sometimes start it off with 2 points. You don't know where it's going. You don't know if you get the divergence going to take off. So you can make it a little bit higher, and then manage it. I think these all need to be managed. So you can start off with your profit factor at 2 points and feel it out. But what you're going to have to do is be hands-on. So when you see that rotation there and you understand you're in a 1 minute time frame, maybe the 5 minutes pointing down, you don't want to you don't want those profits to disappear too fast. So you might not get 2 points. You might get a point. You might not get a point. You might get overbought very quickly. You have you have a tick. Take it, take it. It's the hardest thing you're going to get used to doing. That's the rotation strategy. That's your exit strategy on rotation. If you're dealing with a bigger time frame, you're going to let it go. Then you could feel good. But again, continue to look at that 5 minute time frame. Understand what you're looking at. Manage it. Get your thing. Things get interesting when you get multiple multiple contracts, because the technique and the method is so good that you could lock in your first trade real fast. And I think on your on these multiple contracts, and if you start off with multiple cars, believe it or not, you might not agree, I think the 3 ticks is an excellent first target, and then you scale, and then you move the your second car break even, stop up to break even, and you just let it go. You let it go. It will develop a maybe a trailing stop based on something, maybe in the moving average or something. But I like the rotation the best. Those rotation plays. So if you have a rotation that's working for you on the 5 minute stochastics, you can let that rotate right back up into an overbought level. Again, anything that happens that we see, if a divergence inside of a channel means that a channel is going to break out, so we take that into consideration also. There's a lot of things that add to the decision-making process that, that's going to make things very tricky going forward, because you want to be able to, wow, this is a perfect setup. You know what? Maybe I could just take 3 cars right now just for the hell of it. No, you don't want to do that. You really don't. All right? So... but again, that'll all be risk management for the method. We talked about that. Automatic stop criteria, we talked about that. Position size, and we did that. Set up our charts. I'll work on that. I do have a couple videos on that. Tools for the trade, starting balance, etc., etc., etc. So we went over a lot of things on this, on the Apex Blueprint 5000. I'd like to get this started in September. It's something I wanted to do. I know people have been, want to see more ES trading, especially if there's such good signals coming across. We might as well put it to the challenge there. So with that said, I'll leave you with that. we'll talk more about this Monday. I'll start setting up the forum on this, and you guys could, if anybody wants to make any comments in the forum, it'll be on the members forum. That's on your dashboard, on the top part of your dashboard also. And you'll see some of the videos. Anything that goes out on this from this point on will be focused just for members only. I will maybe release this out there. I don't know yet. Still a lot of good information on it. But that's what's happening here at Day Trading Radio in September. All right. So look forward to that. That's just a couple weeks away, if even that. It's probably next week is September, but we're talking about just a couple weeks away to kind of get this thing nailed home. We'll get a special site for it, a special segment on the site for it, and some other things that are going to help us. I got some good videos for you. All right, that's it for the announcement. Hope you enjoyed that, and you can always reach me at DayTradingRadio or DTRS at DayTradingRadio.com. That's DTRS at DayTradingRadio.com. Any feedback, I'll talk to you in the markets. There's one slide I left out of the presentation, probably the most important slide. And again, I don't know why I left it out, but I'm going back and putting it in here. And again, it's the key ingredient here. The ingredient that takes everything we talk about, the whole blueprint, what this blueprint is doing for us. It really is going to, we're going to apply it so we have that discipline and we have the patience and we have a set of rules that we stay true to. That's all we care to do, stay true to those rules. And confidence comes along with seeing a profitable method work out because of the rules. It's something that's a byproduct right here. So the important last slide, which I didn't mention before, and I have to mention right now, and I think this is a good thing. We were talking about the demo platform, the Apex Futures demo platform, and why are we starting with that? Well, because first of all, it's a demo, and that's probably the best way of getting your discipline and your patience and everything else that you're going to have trouble with. The methodology is there, the alerts are going to be there, everything else is going to be there, you're going to have the opportunities. The hard part is going to be, staying within the defined criteria of all the trades. Everything from your entry criteria to your exit criteria and stops and everything that goes along with it. So the final trade, the final slide, I should say, and again, an important slide of the whole process, and don't get scared of this because it's important. Apply the method to and trade the demo. All right, that's what you got this demo. You're downloading the demo. You have everything about it. You're starting off with that $5,000. If you start with $2,500, that's fine. But if you start with $5,000, that's fine too. And again, this is a demo. You need to double that. You need to double that before funding the new account and then repeating the process. All right, that's the key ingredient right there. So you got the demo. We apply the method. We're going to do this. I want to do it with you. I want to show it to you. So you just have to take the same trades because I want to do it the right way. If you guys do it on your own and fall out of that, that's the thing that you have to work on. But once you get it, once you see this underway, you'll be able to jump in at any time. All right. So that's it. Again, the whole reason we talked about the blueprint here is to apply all this to the demo, make it work, double the account, no issues, have a record of it, and then fund it, and then repeat. All right, you have everything here for you. The whole method is defined in a way where everyone can understand it. The optional, but going to be recommended on my side, the higher highs, capped with reverse candles, lower lows, capped with reversal candles, having the bigger time frame in your favor. And if you're not, and again, this is just a segment, an overview. If you're not, then you're going to be looking at that rotation to be your exit scenario. If you are going to take a long in a downward momentum, trade, don't look for a big bounce. Don't look for a whole, the perfect trade. You want to look for whatever you have. You have a divergence, you have a signal, but you want to just get that first rotation out of the way, and then just move on. and to continue to apply that. That will give you tremendous confidence. All right, so that's it. Finish it up. Sorry I didn't leave that most important part of the video, and I'll attach it right now. Have a good evening.